Salsa, are you ready?
Yes,
You ready? How's your week so far?
it went great. I was on the road with my wife and son, and well, you're my wife, so you know,
Oh my god, you remember. But
thankfully.
yeah, we have been on the road. It's not been an easy journey with an active boy, but we did it, guys.
And in terms of the trading, it's been going terrible. I think I was pretty public about longing POPCAT at the Pico top.
Yeah.
So,
If you listen to the previous episode, Salsa made aggressive moves with meme coin trades, and it didn't work out as planned. And as his wife, I really hope that every loss is a learning opportunity. Anyway, seven-figure losses aside, today we're gonna have some recent market discussions and
hold on
some.
a second. I'm not down seven figures. I'm actually in slight profit. It's profits that were lost. So just want to put that in there.
So it was unrealized profit, guys. Unrealized.
Yeah, exactly. Paper money.
It was paper money, so it's not as painful. He's just trying to cushion this for our son's education. Anyway, today we're gonna have some recent market discussion and some indicators that Salsa used to observe the market. A quick disclaimer before we start: everything discussed here is purely our thoughts and not financial advice. Always do your own research and know the risk involved. So to start off this episode, Salsa, given BTC price movement the past 2 days, do you think we are due for a price correction?
Well, BTC was about to hit 100K and it quite miserably failed to break through. I think we had the announcement after this weekend that Saylor was buying aggressively. He bought more than $5 billion worth over the weekend. There was a $200 Coinbase premium over derivatives, Binance, all the other exchanges. So he was buying pretty aggressively and we failed to break 100K mark on all that huge buying pressure. So on Monday when he announced, market participant probably have smelled that it was weak, and this is what catalyzed the correction when Saylor announced that he bought more than $5 billion worth. And since we failed to break 100K, it was kind of an easy trade to sell and put the stop above 100K. That's how I thought it at the time. I didn't take the short, but I thought about it. So I assume a lot of other participants thought of it. Now, yes, it was quite a large buying pressure, but I think we still eventually break the 100K mark. It just shows that the market was due for a small correction. I think we corrected from 100K to 90K, so that's
Yeah.
about 10%, which is pretty standard in a bull
Mm-hmm.
market. Now, let's see if we can continue pushing higher.
What about ETH? Do you think your ETH entry was decent or too early?
Well, unfortunately, I was way too early buying ETH. My average is maybe around 0.045 per BTC. So I'm charting in terms of ETH BTC is my reference point.
Mm-hmm.
So I need at least 20% more outperformance to break even on that. Maybe a bit less given what I've done with my ETH, the staking aspect that
Mm-hmm.
yielded a little bit. That being said, one thing I did right was to buy in some mental ETH. So last year I think I was pretty vocal about it. There was this campaign on Mental Eat, which basically they gave double yield at the beginning because they have a huge treasury. So to top up from the customer's deposit, they matched it 1-to-1 with their treasury and they gave the yield away for promotional purposes. So that yielded quite a bit at the beginning. I think it was something around 6% for a couple months. And then there were some other promotions like they restaked on Eigenlayer.
Mm-hmm.
So that was a nice little airdrop
Airdrop, yeah.
Christmas present and well, early Christmas, and some campaigns with puff meme coin that you could stake your mental ETH and gain some puff. So all in all, since I bought the ETH, all this probably yielded like 10%. So if I break even at 0.045, overall I would be in profit on my buys.
Do you think you made a mistake with that entry?
I thought at the time that 2023 was analog to 2020, which I think was my mistake.
Mm-hmm.
And there was some ETF talks at the time, and it's been a big disappointment. The ETF hasn't brought many inflows like it was expected. So all of these conditions led to me FOMOing a bit too early. Now that I look at it, yes, I regret buying so early, but I'm still buying thinking that it will outperform in 2025. I think that my mistake was that I bought too early, but the analog is closer to the 2024 election. If
Yeah.
you refer to the 2020 election, what happened is about 2 3 weeks, I think it was two
Yeah.
weeks after Bitcoin broke all-time high, which was just after the election. It kind of settled down for a few days and ETH started running like crazy. So
Yeah.
I think Bitcoin went from 20 to 28k. ETH BTC dropped like 20%. It was terrible if you were holding ETH because it underperformed a lot. And then there was this crazy bull market that ETH was the leader of all coins.
Yeah, I think this time around you're just trying to increase your exposure to ETH, but I think there will be some differences we'll see in the next few months since Gary Gensler resigned. So maybe Ethereum will rally the way you think it would.
Yeah, the market is different in the sense that the ETF and Michael Saylor led to huge Bitcoin buying pressure, and the ETH ETF has been a great disappointment. I think the flows are positive, but it's not been 10% of what BTC was. It's been extremely underwhelming. And I think the reason for that is the absence of a ETH staking ETF, which
Mm,
would change everything. A ETH staking ETF was previously declined in the Gary Gensler
yeah.
administration, so I have some hopes
Hmm.
that the talks might be initiated again and maybe it will go through. I don't know how fast or how
Hmm.
feasible that is, but if there was a ETH staking ETF, I think that's a very, very big deal because essentially it can allow you to invest and gain yields on top of the expected return. And I think traditional market participants very much like the compounding effect
Yeah.
of getting yields on their investments. So that could have a massive impact on the amounts of inflows that go into ETH. And then on top of that, I think if it catches a spark and starts going up, there's the potential for a ESG friendly coin narrative, which
Mm,
basically is eco-friendly coin because Ethereum is proof of stake, Bitcoin is proof of work, and if you're familiar with past two cycles, every time at some point there is some huge narrative that Bitcoin is consuming more energy than an entire small country and that it's gross for the environment and this and that. So Ethereum doesn't have that problem because it's proof of stake. It's a complete different mechanism to validate blockchain. So that could be a big narrative as well. So there is some potential for narratives. For now, we don't see much, but past week it started ticking up. So I'm hopeful it catches a narrative soon.
yeah, well, things might be looking different now that Trump and Brian Armstrong have met up. So I think everyone in crypto will be watching closely. But let's just talk a little bit on something that was trending on Twitter. Not really trending, but something that you and I were talking about on Twitter. Let's talk about your POPCAT trade. I want to just spawn your trade idea, but also just add in a few points of, what you observed these few days with other meme coins getting listed and their performance was not as great as expected. Would you have changed the trade strategy?
Absolutely. So I talked about Bonk previously, so it's good that you ask on PopCat, which is a bit different. The idea was really to front run the listing. There were some rumors that it would go on Binance, Coinbase, Robinhood, and I thought it made sense because I was looking at all the spot markets. It's not on OKX spot, not on Binance spot, not on Coinbase, not on Robinhood. So I thought, hey, maybe this coin can do 3x easily. It's a cat meme. Dog memes are worth like 10 times more. I think SHIB is 15 billion and PopCat was under 2 billion at the time. So I thought if it gets listed on Coinbase, it easily can 2x. That was my expectation. So I thought, hey, maybe those rumors are worth buying into. And so what I did was I bought a dip from 2.1 to 1.88. I bought around 1.88 and it just crawled against me. It was painful. We were traveling and you were asking me how the trading's been going at the beginning of this episode. It's been terrible in terms of my PopCat trade because I held it for many days. It was just painful. The listing didn't come, at least not yet, and I ended up taking a loss around 150. The reason I took a loss was because I've seen some other coins get listed on Coinbase and
Yeah.
Robinhood, notably Flocky and Whiff. And what happens to Flocky is when it got listed, yes, it pumped to all-time high, but retraced in the
Mm-hmm.
same day. So the market has started to sharpen up on those meme coins, and the listings don't have the power that they used to have.
Yeah.
Whiff was the same thing. It got listed on Robinhood and basically pump and dump the same day
Mm.
back to where it started. So I can't really expect PopCat to 2 3x and be and remain there anymore. So that's what really made me just lose hope and cut the trade.
Yeah, but you were glad that you cut the trade, right?
Absolutely, I was very happy I cut the trade because I cut maybe at an average a bit above 150 and
Yeah. It
so
actually
so
went
so I
down
managed
more.
to sell slow. Like I started taking my loss as it crawled down. It
Yeah.
didn't look good, and I think my last losses were at around 147, and right now
Mm.
it's maybe trading at 1.3. I think it went to 1.2. So I would have had more pain if I didn't cut. So this just shows the importance of taking losses fast when you're wrong.
And talking about losses and wins, when you first started trading, which is many, many years ago, I would say like 7 years ago, did you record your mistakes routinely with a trading journal? Or did you find having one actually useful?
Yes, extremely. I would recommend everyone to write more often about their trading and even their lives in general, because by writing, you are forced to put into words your thoughts, and this is not always simple. You can refine and expand on certain ideas more efficiently, reread yourself for mistakes and trains of thoughts that you should explore. So it's, in my opinion, similar to the role of a psychologist,
Mm.
except it's just you and your words. You get to understand yourself better, what you do right, what you do wrong, and it can highlight your strengths and weaknesses and give you a framework towards progress. So journaling doesn't have to be a very draining task. You could start by writing 15 minutes every week about your
Yeah.
trading and work from there. What you did right, wrong, how you felt, what was your entry reason on a specific trade, and so on and so
Yeah.
forth.
And I think this is the very difficult part for most, I would say, retail traders, because they wouldn't even know what to write for their entry. It will be based on their feeling. So, do you have any personal habits when you write your journal?
Absolutely. So I will talk about what I did when I first started because that's when my learning curve was the most
Mm-hmm.
steep. So personally, I took the habit when I started of journaling twice a week. That was pretty easy to do and I would stick to it. You could journal about your trading broadly and add a couple of specific trades to analyze. So the important point is you must evaluate a trade from your entry reason, which is your edge. The result of a trade doesn't matter. It's the reason as to why you enter that matters most and should generate expected value. So edge is all that matters to make money in trading. People tell you things about risk management and all those things, but this is just something that should be self-intuitive if you want to make a career out of it. Edge is the thing that makes money and it's your entry reason. So just remember that, and this is the most important to input in your journal.
Yeah, what did you say in last episode? A lucky entry?
Lucky entry, likely exit. So that was
Yeah.
actually a quote from BitBit Crypto at the prop firm I was working at. He just kept repeating that and it stuck to me. Lucky entry, likely exit. So you want to wait for the market to pay you to come into your entry
Mm-hmm.
and provide you with a plus positive expected value. And that stuck to me. Your exit reason should be the same. When your entry edge is neutralized, you should exit the trade. So
Yeah.
make a plan, stick to it, and make sure that your entry is the one that gives you an edge and that you note in your journal the most. So to put in some framework, why did you enter a trade? So your entry reason. How did you execute and manage risk? And did you stick to the plan? Those are simple things that you can note in your journal when talking about the specific trades, and try to be diligent. Eventually, after you do it for a couple months, you will be able to put some organization, and depending on the trade types, after a while, you'll have a library of trades and lessons to refer to and progress from.
Yeah, that's really good advice. And just now also you mentioned that you work with BitBit Crypto at a prop firm. So one of our audience is curious about your experience. Can you go more into detail?
Of course, it really opened my eye to work with those guys. And that's because before I joined, I was stuck with the idea that technical analysis is some kind of holy grail. When you try to learn trading from the internet, all the gurus teach you how to paint charts, to use various indicators, and they typically have some monetary incentive to teach you that way. They don't really make their money trading. Most of them are simply marketers. So they will mislead you and make you learn things that are a bit useless, essentially. The reality is that technical analysis is more of a marketing tool. It's extremely easy to convince people to buy and sell based off of a pattern and indicator, but the edge it provides is often questionable. There's a lot of noise in all this. In my experience, there can be edge found from technical analysis. When I first started in 2018, 2019, I would do big studies like statistical studies on ETH and BTC, swing failure patterns. I would try to find ways that provides me a statistically significant edge. And I did find edge and trade it, but it was quite slight. The reality is that you don't need to use technical analysis to trade, and that everybody looks at the same thing when you look at the chart. So you need to ask yourself, why do you have an edge over other people? There are many ways to trade, and you should try to look at the market from your own unique lenses. So things that work can be statistical anomalies. You can look at order books. You can look at different metrics like funding rates, option data, so on and so forth. So you need to ask yourself really, why would you have an edge over the masses? And oftentimes, looking at the same chart, you need to have some serious statistical analysis done in order to be confident in your edge.
Yeah, so I'm guessing that you're very glad that you made the choice to get into the prop firm instead of staying in university.
Absolutely. What opened my eyes there was actually there was some guy who was a fund manager before he joins the prop firm, and he was trading his own money when I joined, and he would always sit in his corner and trade the market with only a trading technology interface, which basically displays the order book, and you could click to enter orders. And he was also having a news feed, and that's all he did. He was profitable with just those two tools, nothing else. So this was really eye-opening for me to see those guys in action, actually doing what they preach, and not just people talking to me that I don't know if they're hypocrites.
Yeah, well, talking about TAs and edge in the market, did you observe some indicators from previous cycle that actually caught the top?
Yeah, so the previous cycles were a bit different in terms of the funding rates so far. We haven't seen anything crazy, and that,
Yeah,
that was really an indicator. So the funding rates would go crazy. People would pay huge amount
yeah,
of money to just hold leverage longs
yeah.
on Bitcoin and altcoins, notably
I
ETH.
think at that point you could even hedge a short position with the funding rates.
Yeah, you could, because
Yeah,
you could literally use inverse perpetual. So let's
yeah,
say you short Bitcoin, you could use Bitcoin as collateral. So you technically cannot get liquidated if you do
yeah.
it right, and then you would just get the arbitrage. You would arbitrage the funding, but you would not benefit from the price appreciation. So that was one way to do it. It's still doable, but the thing is, now there's large institutional players that arb those funding rates, and there's protocols like Athena that also tame it down.
Mm-hmm.
So they're literally made, they raise billions of dollars and they arbitrage this funding. So maybe this plays a role, and we will not see such crazy funding rates as 2017 and 2021. That being said, one thing I keep an eye on is the futures premium. So something that we've seen was
Yeah.
the Deribit futures premium in 2021 rose to 25 to 35% at the peaks. I think it was trading well above 80K when Bitcoin was like $65,000.
Yeah.
So if you take that in consideration, I think futures premium trading at a more than 25% premium is pretty likely. Like, I wouldn't be surprised if it happens again, and that would be the first sign of euphoria for me.
I think not just there are bit premiums, even like the kimchi premium for Bitcoin in Korea, it was crazy high at the all-time high last cycle. I think those are euphoric signals that people could catch on.
Yeah, it's interesting to see if we will see those again. The
Yeah,
kimchi premium, I mean, the first cycle in 2017, I remember people talking about this trade, and then in 2021 it happened again.
yeah,
So maybe we will see it again, maybe not. Maybe we will see it to a lesser extent. It's interesting to keep an eye on this. The market has definitely matured. There,
different. Yeah,
yeah,
very different.
there are some things that you could take advantage of on previous cycles that just don't work anymore. For example, the during the COVID crash in March 2020, the market was so hugely dislocated that
Yeah,
you could make insane amounts of money with very little capital from basically what I would call exchanges malfunctions, which really is just the way it was coded, and it could be abused. Deribit was the biggest loser on that, because essentially you would have the liquidation of positions on the mark price, which takes a lot of spot exchanges on the index, and the spot exchange just froze. So you had Coinbase, Bitstamp, all those exchange frozen at $5,000, and Deribit would trade at $3,000. So, so you could long infinite amount of money up to, I think, the $5 million notional limit. And essentially, if you were on 100x leverage or the maximum leverage,
mm-hmm.
you would only get liquidated if the market moved $2,000+ against you. And so those were some crazy dislocations that we would see in times of high volatility, and we really haven't seen that since 2020. There was some depegs like USDC depegs where you get some crazy opportunities like that, where you could really make a lot of money from some kind of malfunction. in a sense. It's more the way it's code. You can take advantage of it, but
But you just have to get in at the right time to actually spot these glitches, because if you miss it, it's not there anymore.
yeah, essentially, I haven't seen such crazy opportunities again since
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 2020.
2021,
Yeah.
2020 actually.
I think all the exchanges just improve.
Yeah, so those things, they happen one time, and then people are aware of it, and it just doesn't reproduce anymore.
Yeah.
So I'm curious to see if we'll see other crazy opportunities as seen. Maybe it will come in a different flavor.
Yeah.
But the market has definitely matured. The exchange are more robust, and the players are more institutional. I think we'll touch on that in your next
Yeah.
question.
So what do you think is the main driving force for this cycle? Because we see, like what you said just now, the leverage play is different.
Of course. So I think last cycle we had a lot of leverage, 3AC, FTX, Alameda,
Yeah.
those kind, and this time it's extremely different in a good way, I believe. I
Yeah.
think Sailor and the ETFs have brought unprecedented inflow to BTC specifically. So they have been the main buying forces of the cycle so far. MicroStrategy holds about 386,700 Bitcoin as of November 25, and the Bitcoin ETFs brought well over $30 billion at the date of this recording. So $30 billion of pure cash flow into Bitcoin. And this is fundamentally different from last cycles because it represents unlevered market participants. You could argue that Saylor is using some sort of leverage or not, but he's been stress tested in 2022 and the market dipped I think it dipped 70% from the peak, 65K to 15K at the bottom, and he didn't sell any. He
Yeah.
was not even stressed about it. So I think it's fair to assume that Saylor is pretty robust in his methodology. So those are unlevered market participants, and typically there is no liquidation price on those Bitcoin buys. So people tend to be in for a longer term view. I don't think we're any close to euphoria today for that reason. You look at the futures premium, the deribit premium, which are at 10% today. There's a lot of rooms for things to get goofy and people to become much more greedy. So when I hear people say, "Hey, the leverage flush is coming," I don't see it in the objective metric data today.
Yeah. So where do you think we are now on the market cycle? Do you think we're at euphoria, complacency?
My best bet, if you look at the Wall Street cheat sheet,
Yeah.
is we're somewhere between optimism. No, we're somewhere around belief.
Belief. Yeah.
Probably close to belief. I don't think we're at thrill and euphoria yet. I think there's easily room for BTC to 2x from here, and ETH has maybe 4x upside. Like, I wouldn't be surprised if ETH outperforms Bitcoin massively if there's any talks about the ETH staking ETF. So we will see. I think things have room to go much higher, and I'm personally looking forward to buying dips. I think this week we've seen a dip from 99K to 90K. You want to
Yeah.
basically show bids when those kind of dips happen.
Yeah, like what you mentioned in the previous episode. But I think some of the retail might be under disbelief. You remember your dad mentioned that he wanna.
Yes, I do see some disbelief on the timeline. People talk about shorting. People are comfortable talking about large corrections every time there's
Yeah.
a downtick. People forget that, yes, Saylor bought, let's say, $5 billion near 100K and we didn't break, but he will buy more if he gets his hand on more money, and he's not selling. He said many times he's not selling. He's been stress tested. People thought he would be forced into selling in 2022 and nothing happened. So I think people are delusional if they just keep betting on downside. And yes, my dad asked me,
If he should sell.
basically asked me if he should sell recently. So I think we're very early in this cycle, in the sense
Yeah.
that when BTC broke 20K and was around 28K, I think it's analog. BTC broke 70K and is now at, I don't know, 95K today. So I think there's many months left for the market to grow, and you don't want to be too early into the selling
Selling.
spree.
Yeah. That's one of the hard lessons Salsa mentioned in the first episode. Last question. When paid Pepper Group?
Yeah, you should be the one running that paid group. I'm just gonna basically take a trade whenever I long
Yeah.
PopCat or some bullshit meme coin.
We just trade against Salsa, and we can
Exactly.
definitely make some money off him.
Yeah, well, you already did, so
But yeah, if you guys still want to know more about the hard lessons and mistakes Salsa did, feel free to tune into the first episode. And that's also where we shared how Salsa got into crypto. And also, if you're enjoying our company so far, be sure to subscribe to Salsa Tequila TV on Spotify and YouTube. This podcast will be a weekly affair, so if you'd like to come on the show and have a coffee chat, feel free to slide into DMs. We'll see you next week.